Okay, folks, welcome back. This is our economic calendar from forexfactory.com. This is the calendar I use when I do the mentorship commentary videos every weekend edition. And I want to kind of cover something that's important because while you don't necessarily see me do this, it is something that I do as a practice. So, in other words, I'm not practicing it. I'm doing it as a routine. Notice there's really an absence of any economic drivers for Monday. Okay, and generally, if you click over here on this little icon on Forex Factory's calendar, this will bring up your settings. This is your filters. My filters are generally this. Every weekend edition of the mentorship analysis and commentary video, you'll always see my calendar toggled with the high impact, medium impact. The low impact is not toggled, and the non-economic is not toggled. The Canadian dollar is, euro, GBP, and dollar. The rest I do not look at because I don't trade them. Okay, in periods of time where I'm trying to be a deviant from what I usually do, I may elect to use Aussie dollar over Canadian dollar or both at the same time. But generally, this is the settings that I use. Okay. With that said, I want you to be aware of when I'm usually doing the analysis for the weekend edition, whether if it's a Friday edition or like today, it's 9:30 in the morning, my local time, Saturday. I will always toggle both the low impact and the non-economic calendar filters. And I want to see if there's anything that's going to be salient, anything important. And if they're not, then I'm not mentioning it. But as it is for this coming week, I want to bring your attention to an event that's occurring for the Canadian dollar. Again, notice that we have Canadian dollar toggled, but there's nothing showing for Monday. But when we show low impact, you'll see on Monday we have the federal election. Okay, so they're doing their Canadian election. So it's, even though they have it low impact here, to me, I think it's an important factor. Okay, especially since it's, in my opinion, a very pivotal election. So we'll see what happens with the Canadian dollar as a result of this election on Monday. Okay, so I just wanted to bring that up and more or less in a point of completion and making sure that you guys are aware that there are certain things that will not appear in my calendar or your calendar if you have the settings that we normally do, but you also want to be aware of certain elements that may impact the markets. For instance, our general election, if you look back in 2016, it caused a great deal of volatility, and no other country is exempt from that either. So just be mindful. Even though I think that they have misclassified it as a low impact thing, I think it is high impact because it is, well, it's a major factor in a country's management and leadership, and that could spell a lot of volatility, good or bad, for the currency. All right, so I just wanted to put that in there for completeness sake. With that aside, on Tuesday, we have New York Open, Canadian dollar, core retail sales. So this is going to be on the heels of the general election, and medium impact retail sales and business outlook survey, high impact at 10:30 a.m. On Wednesday, we have crude oil inventories, high impact. So right away, we have Monday, Tuesday, Wednesday, Canadian dollar. Your focus needs to be there. Okay. Reminder, crude oil is a major commodity that comes from Canada. Okay, that's one of their major exports. So if you look at crude oil inventories every single week, there's going to be a trade around that for Canadian dollar. Every single day that it releases the inventories, there is a trade there. There's a low resistance liquidity run there. You always look for this crude oil inventory in your calendar, and when it's going to be released, generally it's 10:30 a.m. When this occurs, you will see that there is a low resistance setup that you can study in hindsight or run there. You always look for this crude oil inventory in your calendar, And when it's going to be released, generally it's 10:30 a.m. When this occurs, you will see that there is a low resistance setup that you can study in hindsight or study it in real time. Okay, it's a day and time specific to a specific market. Okay, so it's a very generic thing. Every single week you have this, and you should have this in your journals, your study journals. Whether you elect to trade Canadian dollar as a main staple in your portfolio, it doesn't matter. It's something for you to be studying and practicing because it will draw you closer to price and your understanding. But to me, I think it's a bread and butter setup. It's an every single week phenomenon, so why shouldn't you do it? All right, so Thursday we have a medium impact Eurodollar Spanish unemployment rate and high impact French flash survey PMI, and 7:45 a.m. New York we have main refinancing rate, high impact for euro, monetary policy statement, and 8:30 a.m. ECB press conference, high impact core durable goods for the dollar index, and manufacturing PMI at 9:45 for the dollar. So it's going to be a large volatility day for euro on Thursday. And then Friday we have IFO business climate for euro during the London Open. Notice the absence of anything in here on British pound. And I think it's because of today, because right now they're in, I think you guys call it Parliament. The first time in 37 years you guys have met on a Saturday to decide what you guys are going to do in terms of the Brexit. I wish you would all figure it out, but nonetheless, I think that's the real driver. What we see, or what comes from, I guess, today's collection of mental giants in your parliament, what comes from that decision or lack of decision, whatever it is, that's going to be the sentiment that's in play for the remainder of this week for GBP. Okay, so let's go over to the charts and take a look at what's going on for the dollar index and our usual suspects. All right, folks, we're looking at the dollar index, and this is our daily chart. And how nice is that? That is so nice to see. Now, I'm American, obviously, and I'm not saying the destruction and pain on the dollar is something I'm looking forward to. I'm just noting that the things that we were looking for, once again, came to pass. So it feels really, really good as a mentor, knowing there's stages in your development where you're going to have periods of doubt. You're going to have uncertainty. You're going to feel whether or not this is going to be something you can do. Does it really work? Is it something that someone can communicate and transfer in terms of knowledge? Is it going to repeat? Is it going to continuously work? So again, a lot of you came in recently and watched some of the unfavorable price action in here. We didn't really get to run up like we wanted, but we did get the mean threshold hold price. It did pierce it briefly. We didn't close above it. So it's important that this is normal. This is a normal signature in price. And then we were looking for a run below this low here. And then we expected this whole portion of price action, which is a balanced price range. We expected some resistance in here. We did. We got it. We stabbed down here on this one. And I said the next candle, if we open and create a fair value gap and needs to fill it, that's low probability. That means you're going to have to wait for it to run through here before you start seeing low resistance liquidity runs. Doesn't mean that it won't go down to our sell side liquidity pool, which it did, and then met this one as well. It just means that you have to wait a little bit longer versus this type of action. Okay, so I talked a little bit about the contrast between low resistance liquidity runs and high resistance liquidity runs. They both are saying the same thing in terms of directional premise. Okay, in other words, if you're bullish on a market, well, we'll just stick with this narrative here. If we're bearish on dollar, okay, we can look for the sell side liquidity pools where price should be drawn to. Okay, the draw on liquidity, where it's going to reach for. That's the notion that we lean on for bias. Okay, that starts there. But not every single day is going to be a down day, as you saw here on this particular day. While it's small, it's rather limited in terms of the scope of how much of a movement against the down move we were expecting. Nonetheless, it still could have taken another day or two before breaching these lows. Okay, so it's important to note, while we are still generally very accurate on our weekly bias in terms of directional premise, the nature of it being a low resistance liquidity run, that means we're up here expecting to make a run on the liquidity below these lows, and we are expecting high resistance in this area. Okay, so what I'm saying is, while price was in this portion, okay, all of this back and forth, up and down, that's a balanced price range. While it's in here, it's going to create opportunities for it to sputter. Okay, it'll stall, come back and retrace, hang around, run stops, fill in an imbalance, as I indicated. If we had a fair value gap, if it trades up here, we're going to have to wait for it to come down into this area, and then it'll become a low resistance liquidity run environment where we can attack this liquidity pool and make an attempt to get down to here next. But look at the contrast between the daily ranges. Okay, yes, they were going lower here and here, but now look how they open up. Big ranges, because there's no resistance over here. I mentioned this one here. It wasn't even a speed bump. Sliced right through it like a hot knife in butter. Very little resistance at all. Just went right on through it and gunned the sell side liquidity pool here. Okay, so there's a major learning, I guess, barrier for folks that train under me, because you will think that every down close candle is a bullish order block, every up candle is a bearish order block, every run above an old high is a low resistance liquidity run long, and it's not. There's a way of interpreting these things, and also it allows you to gear down. Your psychology in viewing price is going to be affected when you're trading inside of a high resistance liquidity run environment versus a low resistance liquidity run. Low resistance liquidity run is going to be very low stress. It's going to be very low maintenance. It's going to be very quick to get to your profits. It's going to be very fast moving away from your entry profitably, and very, very little drawdown. That's the signatures that go along with a low resistance liquidity run. Low resistance liquidity run trading is the basis of this mentorship. That's what I'm promising you. You're going to learn that. But as a default, you're going to learn what high resistance liquidity runs are. And while we can still trade them, the approach to trading them is going to differ from what we do and how we think and how we engage. And a greater level of patience is required, which is the reason why I taught low resistance liquidity runs in month one, because I already know you're impatient. All of us as humans are impatient by nature. That's our flaw. Every one of us have it. Patience is something that has to be forged over time. So high resistance liquidity runs, while still profitable, still accurate in terms of directional bias and premise, it does not remove or cancel the adversities that you're going to have while waiting for this period in here to be breached. And once it breaks it, price has very limited resistance to reach for lower objectives. There's nothing supporting this. Classic support and resistance say, look, it bounced here, so that's it's got to be a support level. Not that you could tell. How about that it broke? Did it come back and hit that before it went down and run these equal lows? No. So that's institutional order flow. Knowing where the market should reach for, how it should trade in certain stages of that price run, these are all signatures of IPTA. That's what you're learning. Okay, so when we go through these weekly Wednesday and Friday or Saturday ceremonies, where I go through the process of explaining what price should do, explaining what it has done, why it has done it in certain fashion, it's important for you to focus on that. I know what you want. You want to hear me say, it's going to go here, and this is what good point to buy or sell. That's what you think as a very inexperienced trader and student, because you feel that you have to fulfill that part of your misunderstandings or lack of understanding. I'm telling you from someone that has a perspective that's done this a long time, that's not what you need to be focusing on. You need to be learning, how is it that I've arrived at these things and why it should behave the way it does. Because if you focus on those things, by default, you will learn where to buy and sell and where your stop loss should go and how to manage that and how to get targets. And you'll be able to do that on all time frames. But you have to trust me to get you there on the ways that I know work. Okay, so a lot of you new were sending me emails, okay, and I don't answer the new emails, okay, about, can you tell me which order block to take, or which candle should I look at, or what candle in this chart that you share, why didn't you pick this one? I don't answer those emails because I've already stated in the beginning, 99% of the things that you're going to ask me are already answered in the contents lessons, and or it will prompt me to bring it up in a weekly recording. So again, I don't have a lot of time to go through all the emails because there's too many of you. So while I may not give you a direct response, many times I'll say, hey, look, I'll address that in the next video, or not this coming video, but the following video. And I'll talk to you specifically indirectly without mentioning your name. So a lot of the things I'm saying in commentary are actual answers to questions or concerns that I get in email. I don't have the time. I literally, and it sounds like I'm, putting you all off, but you got to think about it. Okay, there's thousands of you, and a lot of you email me things that really don't need to be emailed. And I appreciate sentiment sent to me. Hey, I'm really learning a lot. They're great. They don't really require me to respond. Sometimes I will. Most of the times I won't. It's not because I don't care for it. It's not that I don't appreciate it. It's I just don't have time. So I'm going through the emails, okay, with real concerns about some sticking points. And if it's noteworthy, and I understand what I'm about to say here, okay, I'm not trying to diminish the level of importance that you hold in regard to your question, okay? But you have to trust me. I already know what you're going to ask me. I've done this numerous times. I've done this for so long. I already know in your development where you're at, what questions you're going to have. And I have laid those answers out strategically in the order of importance in the way that the content has been delivered from month 1 to month 12, okay? Those questions that you're having, they're in those lessons, but you have to wait for them. And if you don't want to wait, then quit, because I'm not going to change the curriculum for you. I've done this before with other people, and some people have gotten offended and they've quit, and I can sleep well with that. That's okay, because that's going to tell me that you weren't prepared to be a trader anyway, because you want it your way, and the market's not going to give it to you your way. You've seen this recently with my own concepts. I want specific certain things to happen. They don't always come to me. I miss moves. I missed this really explosive buy in the British pound. Even though I was expecting a bias that was bullish, if it went just a little bit lower on a daily, I didn't get that ultra low point, but I caught some pieces on the way up. So you have to wrestle with this internally. I understand that it's not easy, but you're in good hands here. But you have to gear down. You have to relax and let this process take place. If you're fighting it, if you're trying to rush me along, if you want to prod me to go faster and talk about things faster, or talk about things that you want, you're going to get frustrated. I know what you need to know. I know what things are going to happen seasonally. I know where your focus should lie, and you need to focus where I'm pointing to. Nothing else. Don't ask me questions in the mentorship when you're in month 1 or month 3 or 5. Hey, what's the Aussie New Zealand pair? What's this doing right now? Don't ask me. I don't care about it. My focus is keeping you all focused on 2 pairs, Euro and British pound. Once you learn how to trade with these 2, you can do anything you want to do. Any pair you want, any cross, it does not matter. But I am not going to dilute my attention by looking at everybody else's inquiry about a specific market. I don't have time for that. I don't have it. I would love to do it. And initially, I was trying to do that. But I can't service every single one of you on a one-by-one basis and still keep my focus and still have time to do the thing. I'm a person. I have real things going on in my life. I have things that are occurring like anybody else does. And it's not always good things. And it distracts me. It takes my time and focus away. It wears on me. So I'm real. I'm a real person. I have all those things, and it seems like I'm not, but I am. And I have to have time to be the husband, the father, and the friend and the family member in my real world. Okay. When you are talking with me in an email, it feels like I'm a virtual assistant to you, I'm sure. But I'm one person. I'm the only person in my staff that can answer all the technical questions around the marketplace. Nobody else can say, oh, well, yeah, that breaker is not a breaker because of this and that and the other thing. It's just me. So just imagine if you had, say, 500 people. Now, I have a lot more than that, but say 500 people every day were emailing you, okay? And they weren't just simple, hey, what's this, what's that? And I can just point it out and say it to you in a simple response. Some of these emails are rather long. And say you did that 500 times a day, and you had to answer every single one of those every single day. Plus, you had to do videos. Plus, you had to prepare lessons. Plus, you had to help manage the business. Plus, you had to be a husband, a dad. You had to be taking your kids to school, picking your kids up from school. You got to go to the grocery store. You got to take care of your dogs. You got to take care of the home. All those things. Can you see how fast your time is completely depleted? Now, multiply that exponentially. Okay, that's the level of correspondence I get. So I get a lot of, I guess, emotions from new people that aren't familiar with me, and you think I just don't have, anyone but you as a student. And again, I know what you're asking for, and I know what you feel like you need, but I'm also reminding you that I am limited as one person. I cannot do at the drop of a hat if you email me or if you send me a direct message, which I'm not responding to direct messages anymore on Twitter. So if you're sending me things, I'm ignoring all of them because I get too many of them. And in recent weeks, they've been cut and pasted and turned into things that are not true. So I'm not doing direct messages anymore on Twitter. But some of you get offended because you want me to jump through your hoops when you want me to do it. Your monthly payment to me does not entitle you to have me dance for you, okay? I'm doing far more than you realize for your betterment. You're learning. Your betterment, your increased understanding is my number one priority. You all collectively, you're all going to learn this at a different pace, and it's normal. There's nothing wrong with having misunderstandings or uncertainties, but I promise you this. If you trust what I've told you in the beginning, by keeping a study journal, making reference to certain things I've said, the video that you hear me say it, write down the video where it's at, how to find it in the form again, and what minute marker in that video, and use that, okay? Because then you can go back and verify certain things, because I will say things, especially in this video here, it's very important, the part that I'm going to talk about with immediate rebalance. It's the first time I'm talking about it, okay? So when you hear me talk about it again in passing, you'll know what I'm referring to, because I'm going to go into detail about it today. These are where your answers come. I'm not going to sit down and say, okay, let me go through my index and find out exactly what video, what minute marker I talk about certain things multiple times. I don't have time for that. My library is enormous, okay? My volume is that it's vast. So it's your responsibility as a student to keep good notes. If you don't do that here, you're going to fail. You're going to struggle, and you're not going to get what you think you should get, not because of me not delivering it, but because you not being able to do what you're expected to do as a student. Your responsibility lies with keeping good notes. And if you do that, all of your answers are given to you. Well, I shouldn't say all of them, because when you become a charter member, you're going to have new questions that weren't, I guess, covered as adequately in the core content because they're on the outer edge of the higher tier information, like the algorithmic stuff, the trading plans that have not been developed for these 12 models. And this coming Wednesday, I'm going to be releasing the next price action model. So don't email me about that again. Okay, there's a lot of you asking. I'll do that on Wednesday. All right, so anyway, I want to get this off my chest because I know at the beginning of the video, your attention is the highest. So I want to get that out of the way and just remind everyone, if you've made your payment and it's going to the next month and it hasn't been processed yet, it's because we don't process payments between the 10th and the 26th. Okay, so on the 27th, that's when your next continuation will occur. So if you're making payments between the 10th and the 26th, they sit idle. Okay, we don't do anything with them. So that'll help you, I guess, schedule your payments. Maybe they won't be so early in anymore as a result of that. But we don't process this time. Like, this is our catch-up period. All right. So anyway, all that out of the way, we see that the dollar index did in fact trade down into our sell-side liquidity pool beautifully. I mean, this is exactly what we were looking for, and we got it. Now, when we see this provides very, very easy longs in foreign currency, not just euro and cable, but all foreign currency like Aussie dollar. Okay, but it also provides a very strong downdraft on like dollar CAD. Now, for your homework, you need to be looking at the Canadian dollar futures price. You can find that on bar chart, or you can go to tradingview.com, look up Canadian futures and look at the December contract, because it's going to be December 2019. The symbol month code is Z for that month. So go through that, look it up, and you'll see that there is a bullish market structure for the daily chart on Canadian dollar. Because in foreign currency, the pair for dollar CAD is inverted. So if Canadian futures prices on the daily is poised to go higher, that's inverted for dollar CAD. And if you see these scenarios here, that really fuels the fire for, I'm just going to jump ahead real quick, this weakness on dollar CAD. So it allows this type of pair trading lower to be traded very easily, low resistance liquidity runs. Okay, and that's here. So we have these relative equal lows, which I'll talk about a little bit later in the video. But when we have this condition here where it's low resistance from the bottom of this range, once this leaves that balanced price range, the market opens up and starts spooling. And remember that? S-P-O-O-L-I-N-G, spooling. Spooling is when price starts skipping. It jumps ahead. It doesn't just go like 97.10, 97.9.5, 97.10 again, 97.9.5, 97.99. It jumps, it gaps lower in this case because the direction of the bias is lower. It will jump lower and creates these big porous price runs. It's reaching aggressively and with speed to tackle the sell side liquidity here. So anyone that's been long, okay, this is about the midpoint of that run between this low and this high. So right in here, they've trailed their stop loss. The bulk of the near term open float, the sell side liquidity, is resting right below here. Now it's gone. It's purged. Okay. So since we've attacked the halfway point of this run, it would be reasonable to see it come back up and bump the bottom of this, maybe trade back up into this down close candle. Okay, reach into that. The thing we were looking for back here, the fair value gap, let me take this rectangle off because it's done its job. The fair value gap in here, you really want to take screen captures of this and have this in your study journal as well, because we talked about this forming before it happened. So it's in testimony to being able to forecast and see specific events in price before it happens. The only way I could do that is if I've seen this millions of times, traded it millions of times, executed on it, okay, and have vast sample sizes of having seen it happen and studying it, because this is how the algorithm on interbank delivers price. It's forecastable. It's predictable. It repeats itself. It's not going to stop working because this is how markets book, period. You don't need to worry about it not working in the future. Don't worry about learning right now, okay, and taking the required time, fearing that if you don't get in there and start trading with real money right now, you're going to miss it. That's not real, okay? That's your imagination running wild. Believe me, okay? In the beginning, I felt like that. But now, 27 years later, I don't worry about that anymore because honestly, it's becoming easier as time goes on. It's not getting harder to trade. It's easier to trade because the things are so obvious in price. You don't need to worry about it not working anymore. So just relax, take the required time to develop yourself. These markets are going to be there when you're ready. Okay, you're in a 12-month development course. You should not be trading with live funds, period. You should not be doing it. We're not trading with live funds here. I'm changing your perspective on price. Once you know what you're looking for, hey, you want to trade live funds? You're going to determine that, not me. But you'll be better versed in understanding what price action will do once you understand everything you're learning here. If you rush it, you're just going to rush the fact that you're going to lose money. And then you're going to walk away thinking either, number one, this doesn't work, or you can't do it. And neither one of those are true. So, nice downdraft on dollar. Let's run over into euro. Euro has run up into our equal highs. This is what we had on our hourly chart. And I said that we would have another level of upside buy side liquidity that we would tackle. But for right now, I want to show you where they exist on the daily. So if we continuously move lower on dollar, our next buy side liquidity pool is up here, and then we have these equal highs back here. Okay, which it can do that really quick and catch up with what the Brexit related information has done with cable. I think that it can really close the gap this week in terms of what GBP has done versus euro. Okay, so I really like euro going higher. I like this level here, and I like these equal highs. If we drop down into before I go, just go back and look at your notes on this week here, where I said if we trade down to the order block here, as long as you stay above that, we're bullish. So that was your cue for what type of trading? Day trading? Well, sure, every day we should be looking for a bullish bias. But how about short-term trading? One shot, one kill. Well, I'm looking for the Monday to Tuesday and Wednesday weekly low, preferably Tuesdays, London Open, generally making the low of the week. Swing trading. Well, here's your swing in here. We could be a buyer and expect prices to reach for what? The objectives we were reaching for in our analysis. I'm not that type of trader, but you're getting that information every time we sit down on Wednesdays and on the weekend. Now, I'm not going to hold your hand and say, okay, we want to buy here and we're going to hold it for the, because I'm doing signal services then. Every one of you in here that want to exploit me are hoping that that's what I'm going to start doing, because you're already doing, some of you already parroting what I say in these weekly commentaries. Okay, and you're selling your systems and you're selling your services like you're the one doing this, and you're not. Okay, I've got a couple of you. I'm already on. You're on my radar, and I'm gonna burn you in here. Okay, and I'm telling you, don't do it. But you're not listening, and that's fine. You'll learn the hard way. Short-term trading, swing trading, all of those occur when we outline it on the daily chart. As soon as I drop down into a lower time frame, that immediately changes to day trading. Okay, once we drop to an hourly, it's a day trader's model, because hourly down is day trading. We've had a nice run in here. You want to study from this low up to last Friday's close. Break all that down, okay, and I'm going to do that for you in some manner, not all of it, because if I do all of it, it steals a lot of the discovery for you. But notice how we had a real easy run on Thursday and Friday on euro to get above this high and this high. Very easy, where it was back and forth in here at the same time that the dollar index was inside that range. Okay, it's imperative that you understand this, because if you don't understand this, you will get out of trades too fast, you'll second guess them, or you'll run your stops up too fast and they'll knock you out, and you'll be too afraid to get back in, and you'll miss all the big move. Oh, it just happened, didn't it? That aha moment. One of them just happened. You have to understand the nature of high resistance liquidity runs versus low resistance liquidity runs. Low resistance liquidity runs are going to be very easy trading conditions. They're like the salad days, the easy, just taking money out of thin air. It literally feels like that. Okay. And I probably shouldn't say it that way, but it really is. I mean, there's no other way of, explaining it other than that. When you're trading in high resistance liquidity runs, your bias is correct, and you'll always go back and look at your trades, and you'll see that you'll be knocked out of the trade either by trailing your stop up too tight, or you get taken out because of emotions. What do I mean by that? You collapse the trade, you can't handle it. You just don't know what to do with it because it's not moving in your favor the timely manner that you want it to. Then when you get out, what happens? Boom, blast off. Look at my Twitter. There's a couple people even complain about that, or they missed their entry, but they had multiple entries, as I'm going to show you, to be a part of the move. You don't have to be at the lowest point of a long, and you don't have to be at the highest point of a short. That's not required. But you do need to understand where you can get back in, or get in if you missed the ideal situation. I've taught you that. You're learning it. You're seeing it happen every single week. So let's go down to an hourly chart. I think, again, just for clarity's sake, I think we're drawing to these on an intermediate term level, but we need to bang around in here because in this section of price action, we have the same element that we had in dollar here. Okay, so what does that mean? Up in this range here, well, where we're at now, basically, this until we get above this high, we can expect down close candles and retracements. That's the nature of high resistance. Okay, high resistance is this balanced price range in here. I'm not saying that it can't get up here. I'm thinking it will, but I don't believe it's going to be a straight run through it on one candle. Can it do it? Yes. Is it likely to do that? No. So what does that mean? We can't trade it? We don't trade it? No. It just means be mindful that we may spend a little bit more time between this level here and this level here before running to this. That's my point. Versus getting in here and expecting a real easy ride straight up to running this high here. There's a strong contrast between those two. It's important for you to know what that is and understand it. Dropping into an hourly chart, let me zoom out a little bit here. Put the daily dividers on. Here's Tuesday, and that is New York Open. So we have New York Open creating the low of the week. Fine. We had a little bit deeper run in here. We had equal lows. Imbalance here. BISI was traded back into. Rebalance. And then rally. 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 And up to our objectives. I saw on Twitter, one of them, I don't know if this person's really in the mentorship or not, but he or she mentioned he didn't get it or she didn't get it. I don't see anything to trade. Well, you have to take a look at what's being delivered in price. Higher prices on the daily. So you go into lower time frames and you start looking for imbalances. Okay, look for bullish order blocks. Look for bullish breakers. All of the discount arrays that you would use to frame a long entry. I want to take your attention over to the 16th in here. Okay, and I want to drop down into a 5-minute chart. Whoa, you just did a big drop. I know. I'm taking you somewhere. Just stay with me. This is a deeper interpretation of why I did the long that I did on the euro in here. So, and it was on the scalp video I recorded me doing the actual trade. In the backdrop, behind the scenes, what was I trading off of? It was a immediate rebalance by IPTA, and I'll explain what that is now. I want you to take a look at this. this candle here. And I'll just put another one down here. Okay, so this candle right here, this candle is the candle that creates a buy side imbalance. Okay, so this buy side imbalance running up, you probably hear Bella in the background walking across my hardwood floor. I'm not going to edit that out because she does it too many times. So it creates too much work for me. And I don't really care. It's not that big of a deal unless I make a big deal of it like I just did. So it is what it is. So we had a buy side imbalance here. All this buy side delivery. Okay. Notice what happens. The very next candle, we come all the way back down and rebalance. See these two down close candles here? The high comes in at 110.27.2. The low comes in at 110.26.7. Watch closely. The immediate rebalance, okay, in IPTA is the counterpart to a deferred rebalance. Now, what is a deferred rebalance? A deferred rebalance is a fair value gap that's filled at a later time. That rebalancing is deferred to a later time. The algorithm, IPTA, will rebalance immediately, or it will do it on a deferred basis. Now, the deferred basis is going to have a variable of an element of time, which I'll teach you more about in the 2020 portion for charter members when we get into the algorithm side, because there's certain elements that will help you, like it helps me, nail down the specific times when certain things should fill. Now, I only say that to provide you a reason to anticipate what you're going to learn in charter, but also to differentiate the difference between what you're learning here and what is still to come. Okay, because when you talk about fair value gaps, I'm not done with that topic. Okay, people are trying to teach it now. They think they know everything about the markets now because of it, and that's just infancy on their part. They find something that works, it's amazing, and it's very consistent. So now they're a market maven and they want to make videos on YouTube, and they don't know what they're doing. They can still find some setups, and that's great, but that's not all there is to it. So an immediate rebalance is what I'm going to cover now. So there's only two states of imbalance. There's a deferred imbalance that's rebalanced, and there is a immediate imbalance that's rebalanced. This imbalance on the upside is a fast spooling of price on the upside. The very next candle, and this happens on all time frames. Don't let this 5-minute candle chart throw you off. It's not a time frame specific. It's every time frame. It occurs on every time frame. So this buy side imbalance, everything goes up too fast here. So they rebalance it. Now watch what happens. I'm going to highlight that with a rectangle. Okay, so this whole business in here, we're going to look at it on a 1-minute chart, and it's going to be very, very clear to you what this is. On a 1-minute chart, dropping down into it, scrub over here a little bit. All right, so here's that same 5-minute candle here. Look what occurs in here. We have 8 candles. Well, I don't know if it's 8. Let's see. 1, 2, 3, 4, 5, 6, 7, 8. Yep, I couldn't have guessed that any better. 8 candles down. 8 candles down all make the one singular bullish order block because it's all downside delivery. It runs below an old low, and then we have the imbalance. So this displacement gives us the idea that, okay, our attention goes right back to the order block. That's the first step. Whenever you see a buy side imbalance or when a market shoots off, takes off, okay, you immediately should always consider going in and finding what I'm going to show you here, because this will always give you the rock star entry. And yes, you heard that right. The rock star entry, the absolute best. And I mean primo. I mean mwah, the best there is in terms of entries. This is it. Okay. So now all of a sudden you got your pencils in your hand, right? Oh, you've been boring me, Michael. Now all of a sudden you want to listen. So anyway, the buy side imbalance here, where prices start to spool in 1 minute. Look how much it's covered. Okay, we moved 10 pips in 1 minute. Boom, just like that. That's going to create poor price action in this run up. But now look what happens. The very next 1 minute candle, we open here, trade down. Does it completely fill it? No, it creates the fair value gap. Oh, watch what happens. If we know, I'm going to zoom in a little bit more here. If we know that this run here is displacement, and there's likely an opportunity to rebalance immediately, because every imbalance has the tendency to rebalance immediately. Not all of them do, but the ones that do, if you get your order in, it is unbelievably precise, and it's immediate in terms of response. So we have this little section in here. You see that? That's a volume imbalance. Okay, volume imbalance, but it also is a point of rebalance. The candle closes on this candle here at 110.24 and 6 pipettes. The next candle opens here at 110.24 and 8 pipettes. So there's a little bit of a volume imbalance, but watch what happens. It's very important. Price opens and then trades down. So do we use this candle's high, which is the close, to frame our fair value gap between this low here and here, or do we use the candle's open on this one? This candle's open. Why? Because we offered sell side delivery on this candle down to its low, and then we had buy side delivery on the imbalance. So watch what happens. We're going to take that. That's where the state of buy side imbalance to rebalance exists on the lowest level. In other words, the lowest point in price of this range is now here. Okay, so we have this candle's open at 110.24.8. Make sure I have my fib on it. 110.24.8, and obviously that level here for this low is intact. All right, so that gives us an equilibrium price point of 110.26 and 7 pipettes. The low on this candle comes in at 110.26 and 7 pipettes. Ladies and gentlemen, you cannot get any closer than perfect. Period. Let all these people on Twitter pretend that they're smart, that they figured us all out. They figured me out. We're all scamming. Okay, we're all using rented servers here. We're all doing something surreptitiously. Okay, this is all stuff that you can do on your own, and then laugh at them like I do, because none of this stuff is taught in books. All of this stuff is coming from me. The immediate rebalance is shown here. You have to break it down to its lowest form in delivery. The buy side imbalance, find your BISI, fair value gap, and notice also the order block. The open comes in at 110.27 even. Take that out into the body. Here you go. Even if you use that, that's fine. There's nothing wrong with that. But I'm giving you a higher tier analysis concept by showing you what an immediate rebalance is. Remember, there's two forms of rebalancing. There is deferred rebalance, which is fair value gaps. Then there's an immediate rebalance, which is one single candle comes up and the very next candle comes. Now, in the scope of this 1 minute candle chart, it's not shown in the same perspective as it would be shown on in 5 minute or 5 minute chart. So let me go back up to a 5 minute chart. And here's that same thing occurring on the 5 minute chart. We have that one single buy side imbalance. The very next candle, boom, trades down to it. Perfect delivery to equilibrium. Using proper institutional order flow elements and signatures to then define where your levels should be. So how do you use this? If that's how you define it, now remember, you got to do this in 1 minute. If you're trying to do it with a 1 minute chart and 5 minute setups, you don't need to be so rushed when you're using a 15-minute time frame or a 30-minute time frame or an hourly time frame. They will allow you much more time to get in the order, have it set, and don't worry about it. But how you could use this is this is your level at 110, 26, and 7 pipettes. Okay, well, what's 5 pips above that? You see, you're adding the spread, then your stop goes below the low. Done and dusted. Now, I use this element of rebalancing here in this down close candle. That's the bullish order block. You go back and watch the scalping video I did this past week, and using that entry, all I did was buy back at the bullish order block that caused this rebalance here. There's no reason to go back down there, not even the halfway point, because it's already done its job down here because of the immediate rebalance. Now, I'm going to talk more about more examples and in greater detail of what immediate rebalance is, but I'm going to introduce it to you this week because we're going to ring in a little bit more insights about institutional order flow this coming week on next Friday's weekend edition, because I'm going to give you a little bit more meat on this specific topic. But that's the difference between a fair value gap that's later filled, okay, because that's deferred rebalance. Immediate rebalance is when it occurs the very next candle, and it's not specific to time frame, okay. Another element of it would be, or example would be here. We have the up close candle here, which makes a bearish order block, and then when one single candle down, look at what happens here. This candle opens, trades right back up, and bounces immediately. This is an immediate rebalance. Then price moves lower. You see that? Price never needs to go back above this point here. Once it rebounds and moves lower, you expect price to go lower, reaching for sell side liquidity. Okay, we create a relative equal low here. It's consolidation and runs right for it. This run later has nothing to do with this over here. All I'm doing is teaching one small portion of a fractal of a larger price action continuum. Price moves up and down from discount to premium, premium to discount, back and forth. On all time frames, it's the same price. Your perspective on it and finding these little signatures in the scope of your specific setup that you like to trade. Like maybe you like to trade when the market's bullish on the daily chart and you only want to trade on Tuesdays and Wednesdays using the New York Open and or the London Open setups. Okay, and you can look for this signature here as your setup. They're there, but now you have to start looking for them. And when you see it, your eye will jump to it every time. Like a fair value gap, your eyes can go right to it. Like equal highs, your eyes go right to it. You've been trained to do it. And when you start taking a look back through your study journal and seeing the things that you're absorbing and learning, there's a lot of progress right now, folks, but it just doesn't feel like progress because you want, put me in a trade, then you have no risk, get in there, get money, and that's success. And I didn't promise you that here. I promise you that you're going to learn price action to a degree that no one's going to be able to teach you. If you understand that, you will by default learn how to trade, period. All right, so let's go over to cable, and look how beautiful that is. All right, so we're looking at the daily chart of the British pound versus the dollar. This is our cable chart. We reached a little bit deeper into all this price run here. Remember, it was originally a breaker, and I mentioned that I wasn't sure what we would reach up for next except for this relative equal highs. If it wants to continuously run, that was the only logical level to see it reach for, in my perspective. In last week's trading on Thursday, we got to the bearish order blocks low here. Right there, 129.88. And I'm going to remove this line. And the high comes in at 129.88 and 3 pipettes. So really, really nice run into that. All of this imbalance, okay, all the fair value gaps and such we talked about when it was back in here. We could eventually, if we get above these equal highs, what it would reach for, fill in all this, we saw that. Okay, so the only thing on the upside that remains, and again, a lot of this might be delivered on the basis of what's happening in the Brexit, all of that Brexit-related decision-making, the banks will use that to price it this coming week. And that sentiment may send us all the way up into here. I think if it goes above here, it's probably going to do a whole lot more than I would expect, and maybe even go higher. This whole run in here, look how efficiently they've taken it up. Okay, we had this initial pop here, then a rebalance. What did I just teach you? Immediate rebalance. Okay, price runs here. Candle here, comes down, rebalance, immediate.